It is June 10th and it's 7:47 a.m. I am Rich Posson for Critical Point, and this is the weekly update for the soft markets, New York softs, the sugar, coffee, cocoa, and cotton. Okay, looking at the continuous chart, prompt chart, it's the weekly chart of sugar futures, and we can see the market was supposed to have pulled down into a level 2 bottom, but we had allowed for more of a truncated bottom, little downside, more of consolidation, and then higher. Well, it's doing this consolidation, but the market's actually stronger than anticipated. We may yet see a last minute slide here, or at least a little bit of a setback here over the next 3 weeks, and then it will run out of time, meaning this is the amount of time it takes for these level 2 traders to sell. So they sold, they've come back to buying, or they at least stepped aside, and maybe it's the level 1 trader has been buying, maybe the level 3 trader has been more on the bullish side. We may still see another wave, but I'm concerned that the selling came in early. Maybe it was broken up and we'll see 2 waves, but I think it just came in early and it's mostly over and done with. So I think if you see a sign of strength, meaning a strong up week, I think we should go with the idea that, hey, a level 2 bottom occurred somewheres along the line, wasn't that useful, couldn't time it that well, and that the trend is up into the next level 2 top. And all of this tucks inside a larger level 1 trend. So level 1 trader has likely been mostly buying. It's possibly set back a little bit with the level 2 trader, but mostly buying. We now have a minimum upside objective of about 19.10. We have a maximum objection of 20.59 for the spot or prompt futures. Okay. Now the weekly there are 5 week stochastic returned to mid-range and then turned to a buy signal, and then we can see the price response was there. So we have to consider this as a secondary buy level, and maybe the indicator is showing us the more likely level 2 bottom than the model itself. That it is some kind of an on-time or leading indicator and doing a little bit better than the model. Other information we can look at is that when price rallies above 18.25, that would be evidence that yes, the level 2 trend is up, and we're seeing another leg higher of a level 1 trend that's inside of a long-term bull market that may last into next year. So I don't have much to say here. I think bullish traders are at risk that this market may yet still pull back to like 16.29 or something like that. On the other hand, it looks strong enough that I think if you're willing to probe this, stay with it, give it a chance here, that there may be little downside. If this would actually move higher next week, I could see how you could have a trailing stop near or below this week's low, and then just start over if you get stopped out, move back in to buy it again. I have no fresh news for you on the fundamental side. The model's kind of automatic pilot, saying it's so-so. It's relying on marginal and margin demand that's part of available supply demand. It's the way business is done regardless of fundamentals, and that's present day in, day out throughout a year. And it's just saying sugar's probably going higher. Okay, so now let's look at coffee. And coffee is very similar to sugar. We have a level 1 uptrend into sometime July. The market has likely launched a new bull market here that could last for quite some time. But we'll take it one step at a time here. It can still have corrections. What's going on, though, is coffee started down here to go into a level 2 bottom, changed its mind, and it's already begun swing highs. It's going to bounce higher into that level 1 top. But I think the reason it was trying to pull back last week and some of the weakness this week is the market realizes that it started up a little early and it's trying to pull back in that level 2 bottom. I think there's very little downside here. I think it's about over. I think it should bottom by no later than next week. For a level 3 bottom, that should trigger a level 2, and we'll see the next increment higher. And this way, the swing lows should now move higher, along with these higher swing highs. And what's the definition of a uptrend? Higher highs, higher lows. I think this is moving higher, even though this market is overbought on the weekly stochastic. We do have weekly open interest rising. Money's flowing into the coffee market, and more so from the demand side. So we can summarize that, simplify it, as net new demand in the coffee market. Now, as far as upside objectives, I'm looking at 180 or higher. Doesn't necessarily mean that that will occur with this level 1 top. It may come in later in the year, but it is something to consider. I think once this little setback is over, you could do some calculations of this amount of decline. What does that mean for projections? Probably means 173 or higher as the next increment within these level 2 and level 1 uptrends. Hopefully that makes some sense. And likewise, no fresh news other than we know we've had some damage around the world and in Brazil. We know that the demand side is kind of picking up a little better here due to the growing global economies, and then the inflation betting. Now for the cocoa market, we've got a dilemma here in that, yes, a level 2 top is probably due sometime in July, but a level 2 bottom is also due sometime in July. This could mean that we're going to see more range trade, that this is just a lethargic market. And I'm really not finding the fundamental shift here either way to make it very bearish or very bullish. I still believe on a long-term basis, sometime now into 2024, cocoa is going to kind of be in line with the U.S. grain markets, not necessarily from a weather perspective at the same time, not necessarily the same year of a bull market, but it's just due for a wake-up bull market. And we've already seen this in sugar. We may now see it developing in coffee. And I just think someday, yes, cocoa will make a run above 2,800, probably above 3,000. But right today, it's still stuck. It's lethargic here. It's in a rut, okay? Open interest is rising, so money's actually flowing in this market, but we're seeing the equilibrium. Both the buyer and seller are kind of in agreement doing it at the same time. I suppose that means nothing, but it makes me think maybe this market, if we're right on the bullish scenario, maybe what we're witnessing here is accumulation where the smart money is buying up cocoa and the not so smart money is selling and hedging because they're fearful there's just nothing here, so therefore it must have to go lower, and it's going to be the bears that'll be wrong eventually. It's very easy to flip that scenario the other way, however. So we really don't know. I'm just kind of encouraged that there's more money coming in here. This market is attracting some, and I just wonder if it isn't the short-term trader who's on the bear side, but maybe the long-term trader's on the bull side. But again, you may be able to flip that the other way. If you think I'm wrong, go with it, because there's really no indication right now what they really want to do. All we know is they're a little bit more interested in cocoa than they were a few weeks ago. There's a little bit more money coming into the market. I don't have much else to say. Resistance is recent weekly highs. Support is recent weekly lows. It just looks lethargic. Let's move on to the cotton market. Okay, so here's the weekly cotton market. It's currently operating off the July. And 5-week stochastic made it to oversold. Another way of thinking of some degree of undervaluation, perhaps, has turned to the buy side. And did that ahead of the time for a level 2 top. So this is also showing some flakiness, fuzziness, just like the coffee and sugar markets. So I wonder, does this have something to do more with the investment side, or are we looking at commercials that are more conglomerates of all these commodities? They're also doing the same thing. I don't know what has caused them to turn a little bit bullish here ahead of schedule for those 3 markets, but it has worked. It may be that the global economy is moving forward. We had good PMIs recently for the month of May, supporting that idea of economic growth. And then it may be the inflation scenario, which, by the way, in a few minutes here, we're going to get the U.S. inflation number. We'll see how that excites some markets or not. Open interest is doing nothing here. It looks like to me the same crowd just trading cotton for something to do. But there's no question about it. At least last week going into this week, we've had a little tip in the pendulum that favors more of demand than supply at this time. And I think they're just taking care of normal business. The model suggesting that cotton could top out as soon as 2 weeks from now and then sometime into mid-July. So rather wide range there, which is typical of starting out of looking for time targets. So we do have to consider, yes, this market wants to move higher, and maybe it's going to wake up and move sharply higher into July and give us a new high for the year, which is going to cause some severe problems for our long-term outlook. But until that occurs, I'm staying with the idea the high of the year was at least a minor long-term top in cotton. It may have been major. If it was major, cotton's going to be range-bound for years to come, which means more downside than upside right at the moment for duration and price change. But if it's not the major, then at least minor-wise, cotton should back off into next year and then move higher. And what have I been saying for commodities in general? They ought to back off this year into next. And I think we have caught the top in lumber. I like what I see in lumber. I think it's topping out. Copper may have also topped out. Now we just need to top out the crude oil energy sector, which will probably do that in the next month or two. So I think we're going to be right that this whole inflation scenario is overdone. I think we're in 1951 when we had a surge of inflation, and we will probably not see this year's inflation as high as in 1951. It was well over 7% then. And then inflation just dropped to 2 to 3% over the next few years and eventually to zero before rebounding a little bit for the next economic peak. And that's what I think is going to occur this decade, is lower inflation rates next year on into near the end of this decade, when we'll see inflation pick up again as the economy comes near its business cycle major long-term top. Okay. Now, that means, however, that overall inflation this decade could be higher than the last prior decades here. I'm not ruling that out. And it means prices will move higher practically every year for the decade in general. I'm just saying the pace of rise is going to be slower, such that most people will become complacent to it, and traders, it will not become that big a deal. In addition, this bull market from last year, by the way, that was our family and company mascot, Lulu, Sheltie dog, our new puppy. Anyways, we need to consider that we're just seeing a massive surge here in inflation, and then it just settles back. But we are in a new super cycle trend of rising inflation in coming decades. But recessions will deeply knock down inflation at times, and the same for interest rates. And the bond market really seems to be sending signals it's not that concerned of rising inflation. Maybe it'll change its mind today here off of this inflation report, but I kind of doubt it. So what I want to point out is commodities probably these prices are going to buy lots of supply in coming years, okay? And I just don't think commodities can sustain this super cycle of inflation as well as, say, labor and some of the other inputs of inflation. Hopefully that makes some sense. At any rate, I think cotton's going to bump its head in July. It's not going to go to a new high. And then it's going to come down by August into a level 1 bottom, since that's one of the more important bottoms here that could then be more downside. I think it's basically range trade through this summer and perhaps even into fall. We may not get any significant decline to near the end of the year on into next year. Now, I will say news this morning is showing in western cotton belt area that the news is a considerable less acreage planted. So there's definitely supporting factors to keep this market from coming down all that much into next year. I just think it's rather limited on the upside, okay? Proof of that would be if the market were to violate recent lows. Now, if it pulls back a little bit by next week, I think that'll just be a level 3 pullback. It may be some kind of distorted level 2 bottom, and then it's just going to move higher. So I do want to be near-term bullish. Sugar, coffee, cotton. Just realize they can set back in the next few weeks for last-minute level 2 bottoms and then move higher. And then I think cocoa is stuck in a rut. Hopefully this has been some help to you. Past results are not necessarily indicative of future results. Have a great weekend. Stay safe. Stay healthy. Thank you.